Hello there, Mavericks. This is Imri, and welcome to today's currency recap. It is Thursday, January 11th. All right, so as usual, we will be doing a review of the trading day. We'll be going over some meaningful news of the day, as well as some big news coming out yesterday as well. We'll be taking a look at the broader equity markets. We'll be doing some commodity analysis. We're going to be doing some technical analysis on the major indices, taking a look at our currency baskets and any upcoming major news reports to close out the week. And then finally, we're going to wrap things up by taking a look at some currency setups and opportunities. Let's get into it. In this currency recap, we will be using some advanced technical analysis. We believe technical analysis is the fundamental skill of every profitable Forex and crypto trader. Maverick Currencies is currently hiring serious technical traders for a trader position. Traders will trade firm capital and keep 70 to 80% of the profits. So, if you are a technical trader with a technically based trading system, we want to meet you. Click the application link in the description below this video to learn more. Now let's break down today's market action. Market analysis. Okay, so kicking things off with some news. Today's CPI report came in hotter than expected. Equities sold off. The dollar caught a bid, meaning it went up, and then it pulled back heavily towards the end of the trading session. And then from yesterday, the Bitcoin ETF approval landmark decision by the SEC has sent crypto soaring, but a lot of that initial move up has petered out in some of the cryptocurrencies. So we'll be taking a look at the cryptocurrency basket as well. As far as performance on the day, you can see here how the crypto basket actually ended the day down. Oil had a big day today. Gold mostly flat. S&P borderline flat on the day. Same with the total world stock index. Moving on now to our currency performance, fiat currency that is. The yen was the big winner on the day. The pound and the New Zealand dollar in second and third place respectively. The biggest losers on the day were the Swiss franc, the Australian dollar, and the Canadian dollar. The US dollar and the euro pretty much flat on the day. As far as cryptos go, Bitcoin Cash had the biggest move, but Bitcoin itself was the biggest loser of the four cryptos we're tracking here. And then in second place, as far as positive performance goes, we have Litecoin, and then in third place, Ether. So in terms of the market outlook, we're still at a +3, and boy, we are so close to breaking to a new all-time high here in the S&P 500. I mean, we're about 21 points away from a new all-time high S&P points. That's not that far off. I'd be shocked if we didn't get that in fairly short order. Once we do break to new all-time highs, however, I think the risk skews significantly to the downside. And as far as news events go to close out the week, we've got PPI on tomorrow on Friday. And then overnight tonight, we're going to have some inflationary data out of China and then in Great Britain as well. Okay, moving on now to some currency analysis. Taking a look at our velocity score, it's an interesting mix here. If you're looking at the fiat currencies, in the -1 slot, we've got the Aussie, the Canadian dollar, and the US dollar. Smack dab in the middle, 0, we have the New Zealand dollar and the Swiss franc. +1, we've got the euro. Then at +2, we have the pound and the yen. It's an odd mixture. It's a very odd mixture, and that's why we're going to be extra careful as we head into TradingView now to take a look at some of these potential opportunities. All right, so I was flat out wrong on my yen call, where I said I was expecting the yen to strengthen immediately. Flat out wrong. Happens, but I still do expect yen strength, and I will walk you through my very simple technical rationale as to why. From an LE wave perspective, we have a very clear 5-wave movement. 1, 2, 3, 4, and 5. To my eyes, that is a picture-perfect textbook 5-wave movement, which means we need at least one more 5-wave movement to the upside to conclude this period of yen strength. So we don't have a lot of room to go. I think the sell-off from a corrective perspective looks complete. The reason I thought we'd find support last week is because, well, we were approaching that 61.8% retracement level. Now we've broken below it, gotten closer to the 78.6% retracement level. But nonetheless, just based on the Elliott wave count, I'm still looking for significant yen strength. Today might be the start of that. Now, just because we see yen strength in the basket, or I see yen strength in the basket, doesn't mean that we're going to get yen strength as a follow through. So we're going to take a look at sterling yen, which was one of the trades that I identified last week. And I'll show you how, we didn't get the whole move I was looking for, but there was an opportunity to take advantage of some temporary yen strength and some temporary pound weakness. So we'll take a look and recap that trade as well. All right, so with the dollar, we're still playing out my forecast, which is where I still think we're going to get a significant move up in the dollar. I still think we need to trade a little bit lower first in the dollar before we head higher, but I have my eye on where we were trading towards the beginning of December, and then I think that sets the stage for significant dollar weakness. The Swissy said, I'm still looking for higher. That hasn't changed. We're trading sideways right now. We might create some kind of triangular trading structure, potentially something like this, before we get a larger breakout to the upside. Taking a look at the euro, this forecast is playing out really well. Just saying we need a little bit of a spike upwards, and that'll set the stage for euro weakness. That makes sense based on what I'm seeing in the dollar index and with the dollar in general. So euro weakness, dollar strength, I can totally see that playing out. And then the pound, well, I thought the pound would stall in this broken support, turn into resistance area. That hasn't been the case. So now if we're examining what's going on here, we can look at this structure as a very wide potential range. All right, I personally love wide ranges because it offers great two-way trading opportunities. So if we now trade into the upper area of this range, right here, stall, create a reversal pattern, and then start trading lower towards the bottom end of the range, that would be fantastic. And then we can look for the opposite setup at the bottom of the range. So right now I'd be looking for continuation patterns in the pound, potentially up into this resistance area. But I think we're getting to the point where the risk is skewing to the downside, in my opinion. So once we're in this resistance area, I'll be very actively looking for short positions. No change in the Canadian dollar forecast. I still see the loonie trading back to where it was towards April, March of last year. Aussie dollar. So we've broken out of this falling wedge, and we're now testing this broken trend line as potential support. I'd be looking for a base to form here, followed by a swift move, a swift advance past the December 28th high would be a great statement of intent by Aussie bulls. And the Kiwi dollar is just trading sideways after breaking out of this inverse head and shoulders pattern. And then finally, we've got the Bitcoin or the crypto basket. So you can see we've traded out of this sideways triangle structure right here. And we're now getting this really scary looking doji candle. Is it called a doji? Forgive me, I'm terrible with candles names, but I don't think you need to know the name of the candlestick pattern in order to assess what the market's trying to tell us. And what it's telling us here is that we don't like being up here. We definitely found some sellers in this region. The question is this fair value for Bitcoin? Are we going to see order flow balance in this region right here, or in crypto in general? I don't think so. I think it's more likely we're going to break down and at least get back to where we were, closer to 43,000 on this basket, potentially pushing down into the 39,000 range. So I definitely think that risk is getting skewed to the downside now for crypto temporarily, however. All right, recapping what's going on with sterling yen. Okay, so this is really interesting. So we had this triple top here, and we've broken past that. But before we broke past it, I think, depending on how aggressive you were, there was an opportunity to take advantage of some temporary pound weakness here. So just again, to give you a bit more of an insight into what I'm looking for. So what I was looking for originally, right, is a 5-wave decline, 1, 2, 3, 4, 5. That gives me the confirmation that we need at least another 5-wave decline in the opposite direction. And then we had a little 3-wave move up, and then we had another 1, 2, 3, 4, 5-wave decline on the way down. Now, unfortunately, this ended up being an A, B, C corrective sequence leading to new highs in the currency pair, thereby limiting significantly the downside potential. But the actual entry I was looking at was fairly straightforward. Waiting for the three-wave bounce. Now, in real time, I wasn't sure if this was the first wave of that three-wave bounce. This was the second. We would make a third to break above here. That's typically what you would see. You would see the market break above this area, but we didn't. We kind of put in a double top, and very simply put, I was looking for a break of this trend line with a stop right above, and at least going back to lows before looking to manage the trade. So, 1.4 to 1 is on the low side of the reasonable risk reward expectation. But, I was potentially looking for an 11 or 12 to 1 trade. Didn't get that. Took half profits at the bottom here, got stopped out for the remainder at the entry point. So that's just an insight into how I manage trades. Once I get my 1R, I'm locking in typically at least some gains, removing the stop loss, at least to the break-even point or the entry point, depending on how we're trading. Why did I move my stop loss in this case and take partial profits? If you look at the RSI, you can see how oversold we were. So the RSI registered an extremely oversold signal as we entered into this double bottom area on that 15-minute price chart. So that was the technical indicator for me that probably overstaying our welcome here and that there's something else that's going on. Now, what ended up happening in sterling yen is we ended up creating this bull flag and we broke out of it. The setup was really obvious. I did not participate in the upside on sterling yen. Now, in hindsight, that makes me look pretty stupid. But again, I'll explain why. So the reason I didn't want to buy that falling wedge or bull flag in sterling yen was because we had this triple top still. I didn't want to buy right into resistance. I didn't want to see this happen. We make one more high and then we go crashing off. So I thought the risk was still skewed to the downside. Obviously, as it turns out, we've punched through that resistance and we're now setting up with some major bearish divergences. Look at that bearish divergence on the 1-hour chart. So I think now is a time to be cautious with sterling yen. We've had a big move. Even on a basic mean reversion principle, I'd be looking for a snapback here in sterling yen at least. But I think there are much better trades right now. I just wanted to recap sterling yen specifically because we talked about that last week. All right. In any event, traders, that wraps things up for now. In conclusion, always remember, continue playing relative strength and weakness, pay attention to proper position sizing, and always, always follow the trading plan. All right, that's it for me. See you guys next week.